Good morning, everybody. There's Kramer. Gotta love Kramer. Can you guys stop hating on Kramer for like 1 second? God, man. He's not the Antichrist. Leave him alone. I'm making this video because we are getting really close to another inflection point. Last video we talked about literally I think it was right here. Probably right here. It was imminent that the market could have corrected, and we dropped, and it held literally at the moment of where it needed to hold or it was going to crash. It held, and I'll show you on the VIX. Since it held and it created a very, very strong anti-UVX move here, meaning it didn't go up much, but UVXY got crushed, increases the probability dramatically that this goes higher. Doesn't guarantee it, but it increases it dramatically, that we get an everything rally going into September. A lot of stocks look like they're going to pop. A lot of stocks look like they're going to pop. EVs, DraftKings started going. There's just a lot of stocks set up to pop here. I want to go through the S&P target and pattern, and then the VIX target and pattern, and something that has happened years ago that we'll go through. So S&P, I kind of want to see this happen. That middle of September, end of September, somewhere here. I want to see a blow off top. The last 2 weeks September, first week of October, most likely like the third week of September, something like this. If this holds, and it has to hold today, tomorrow with the Fed, the Jackson Hole, possible some volatility. If it gets through that and holds, if there's volatility, especially if there is sharp, strong volatility and holds and makes a new high after that, this should play out. We should end up going up to at least 4650, 4750-ish, this area into September, and then there will be an everything rally, and you'll start noticing the stocks that have done nothing since February, the SPACs, the ARC stocks that have done nothing since February are all starting to go again. This is not a resurgence of them. This is not a secondary wave where, okay, this went up a gazillion points and then went down and now it's going to go up a gazillion points. This is going to be a residual move of that, meaning it's going to be a very condensed, sharp, short move that looks like and reminds you of what just happened the last year. This is a move to sell into, not buy and hold. Because once volatility starts and the taper starts, guess what stocks are going to get wrecked? The meme stocks that are not making money. The SPACs that are not making money. Okay? You need to be very, very cognizant of this, because that is what's going to happen. And I believe that, so it went from the degenerate plays, the penny stocks, the SPACs exploded the first part of the rally because it was so violent, and then the cyclicals moved the rest of this year. And now I think that once volatility comes in, you're going to go into the value play. Companies, the chip stocks, companies tried and true, stocks that haven't moved that much, I think that they're going to be the biggest movers going into next year, before we get a 20% correction. This is how correction patterns happen. You end up getting a violent move in a violent uptrend. You get like a violent move, and then you get one last major top where it tops out, and then you get a large correction that breaks the low of that. It's like a wave 4 of something, and then the wave 5, and then you get the wave 4 that usually breaks the low of this. Something like this is what I expect. I don't know exactly when it's going to happen. It depends on how all this moves, but we'll be able to figure it out on the way up. Yeah. And let's see. Now we want to look at, so that's S&P. We want to look at how the VIX will move according to this. We were right here. I made the video right here. It needed to break this. If it broke that the next day, it was off. And look what it did. It came down into the zero line and then activated. Touched the zero line, started curling up, and then activated on the taper announcement, the 17th, and exploded up. The VIX is bullish. the VIX is bullish. People don't realize that this is how the market stealthily creates a flash crash. Okay? If you look back on COVID, this was COVID. Okay, 85 it went to. So you see how the MACD, there was a little violent there was a small correction in January, February, and then the VIX pulled back. Look at the MACD. Up, you can see it's about to cross. Before it even started going, you can see it's about to cross, and then it takes off. This is how, and nobody knew. We were basically at all-time highs here. Nobody knew, nobody cared. It felt fine. And people didn't realize how stealthily the VIX was doing this. It was so obvious. This created a positive VIX pattern. The MACD is now above the zero line. So any oscillations that happen are based on a positively trending VIX. See that? That eventually is going up to the zero line. This is going up to the zero line. It's just about how it gets there. One of the biggest things people don't realize, weekly middle Bollinger on the VIX. Look where we are. People don't remember, in March, we had that violent drop the first week of March. It spiked, it stabilized itself on the weekly middle Bollinger and then failed. Tried to break it here 3 times, failed. Tried to break it here, failed really strongly, which usually means it's going to eventually break it. And then we had that violent drop in July, 2 of them. Tried once, failed, and then we had that really, really violent drop here. We broke it. So it broke the weekly middle Bollinger in the middle of July. That was this. That was this move. That created a glitch trade. That was this move. It broke it. So why are we going higher? It's a function of how the market and the VIX move. And the fact that it didn't go right here means that the move coming should be a flash crash. That's what that means, is that it could have, it should have, it had the energy, it had the wave for it, but it didn't, which means that I want to see this. Look at this. It's now above the weekly middle Bollinger and holding. Look at this. It doesn't feel like it. We're at all-time highs. The market looks insanely bullish, and it's holding. That the VIX is slowly turning into a positive wave, and you end up getting what you end up wanting to see is chop somewhere between 16 and 20 for the next couple of weeks, and you want to see a very violent drop. And I would assume that happens on Fed Day in 3 weeks. A violent drop to the downside where it tries to retest going below the weekly middle Bollinger in terms of momentum. So it'll try to go below it, and that will get rejected. And I think it'll get rejected slowly and quietly, and then flash crash. And I think that the VIX will break that 38 high. This VIX move was the sharpest VIX move in history without a 5% correction in the market. So this was a stabilizer for the VIX. This is a very, very unique type of move. This will rear its head in the months and years to come. And I think that we will break that this year. And that will be the top point of momentum for the VIX. We may end up gliding past it on like a day, like it goes up, market like spikes, and then the next day gaps down, and the VIX spikes again, and then that's the top for the VIX, and it comes straight down. Something like that. That's what we're looking for with the VIX. And this can chop. This can literally go up while the market goes up. That's what you actually want, to be honest. This UVXY. Okay, look at this pattern. Look at this pattern UVXY. Okay. It started going bullish the end of May, June. It broke the uptrend in the market on July 19th. This is a break of the uptrend in the market. And why are we going higher? Because it's residual momentum. It's also a stabilizer for the upside. It's how the market needs to stabilize for the wave coming. So the market can't just drop. So if it stops its uptrend, it can't just go down, because it needs to stabilize to the upside so that when it does go down, it still has the momentum to go back up. That's how the market moves. So you need to realize for the next year, year and a half, that all the volatility we get, all the noise that we get, all this talk about taper, rates, everything, all the noise, you need to understand and remember this rally coming in the next month. This will represent the strength of the bull market coming in the 2022 to 2024. It'll be the strength of the bull market rally. So the more violent it is, the more bullish we're going to be. So just remember that. And again, we need to get through Friday. If we don't get through Friday, the correction can literally start right here. The VIX can bounce off that weekly middle Bollinger. So again, get the violent drop. If it holds, we rally into mid-ish September, 470-ish, everything rally, all the SPACs, all the degenerate stocks. I think the meme stocks are about to explode. I'll make another video on the meme stocks of where I think they're going to go. UVXY, look at the pattern here. Okay, see how it comes down and then breaks. Okay, this goes up to the zero line. It goes down. It does this violent spike here. It does this violent spike here, retest this, and then fails really sharply. See that? Remember that, okay? This was the 2018 flash crash. Okay, see this? Pop, pop, pop. We retest it, violent pop. The MACD looks exactly the same. We look like we're right somewhere here. I don't know if this happened yet. This might have been last week where we retested this in a very violent way, and then we're either right here and this is going to be the Fed on Friday, or we're right here in the Fed and we're going to explode higher and UVXY is going to get crushed. What you're looking for is a pattern like this. UVXY going lower, getting annihilated, but then ends up getting this really weird coiled move. If you ever follow the SPY in UVXY, you'll notice how UVXY is not going to move similar to what it normally does in a normal bull market in the next 30 days or so, because it's the end of a correction and they move very weird. It's very coiled momentum. It's hard to explain, but you're going to see that the MACD is going to go trail positively, possibly with a negative DMI, we don't know. It's going to trail positively and go lower. This is a clear sign in terms of market psychology with the market top, euphoria, everything exploding, everything looking exactly the way it should, and then this happening with everything set up for it, with the VIX going positive. This is where you buy it. And this actually went up to 2,000 pre-market. This day it was up here pre-market, so you'd expect a 500% move times 5 move, 400%. So what am I looking for? I'm looking for when this starts possibly a neutral print. That's the one, a daily neutral print towards the top, or when UVXY starts trailing more positively like this. Once you start seeing it pick up and go closer to the zero line, it's less likely to make lower lows. That's what I'm looking for. It doesn't have to go exactly like that, but this is a template that's looking very, very, very similar for it. And this is the template for many corrections. This has happened very similar in many corrections. And don't get faked out, because there'll be multiple times. Fake out, right? You're going to get like a 3-4% drop in the market. It's going to get bought up and everyone's going to say, oh, it's going to get bought up again. And then one day it's going to gap down from that buy up. See that? Just like that. Just like that. And everyone's going to get caught with the pants down. And before you know it, boom, like you won't be able to trade it. You're just going to have to believe in what you have and trade it accordingly. And I know what I see, and it's going to happen. So we need to be vigilant, guys. Stay sharp. You need to have a core position in this, in UVXY. It doesn't matter if this goes down to 15 or not. Okay, we just lagged out. This doesn't matter if this goes down to 15. It's going to go back up. And so that's a pattern for UV, and this is the pattern for the VIX. And the VIX is starting to trail positively. And it's so amazing that it trails positively quietly, stealthily, and nobody realizes. We're just chilling at all-time highs. We're just chilling at all-time highs, and nobody realizes it. This is how flash crashes happen. This is setups to flash crashes. The psychology, the technicals, the algo print for it, it's all there. We're set up for it. So if we get this rally, guys, sell into the rally. Sell into the rally. Let the rally happen. You're in positions. This is not where you buy and hold and go, oh my God, I'm gonna be rich again. No, break even. Break even from February. Get out of the positions you were screwed in. You need to reassess. Let the, oh yeah, where's it gonna go? I think it'll be about a 13% correction. %13 correction around here somewhere. I actually don't think it touches 4,000. Somewhere around here, about a 13% correction, and then I think we go even higher next year, almost instantly. I think we go way higher this year. So if it happens September, October, I think we may even go back to all-time highs by the end of the year. It will be very violent. I think it'll be very violent updraft. So you want to buy the dip as quick as you can. Value plays, value. And then we will rally. I think we could probably get to 5,000 by next year before we then double dip back down to 4,000. So that's the template. Keep at it. We're almost there. Lots and lots of money possible here. You need to be in UVXY, or you could. I don't want to buy options right now with the way this looks, unless this somehow reverses. I'm not going to buy options here, but I'm holding a core position at 27.5, and I'll average lower if and when everything looks perfect. All right, guys, I'll make a video for the meme stocks. I think the meme stocks are about to explode. You're talking the GameStop, the AMC, the BlackBerry, the Rocket, the Naked, like the Clove. I think everything is going to start popping here. All right, guys, it's almost the morning bell. I'll see you guys in the next video.